Hi there, good afternoon. You're watching Closing Trades on ET Now, a show where we're going to make sense of the market action we've seen today. And what started mildly positive for us has ever since the opening bell, it's only been consolidating. That's the texture of the market that we've been seeing in today's trading session. Nifty has slipped below the 24,900 mark and looks like 24,850 is a support level that we are managing to hold around. But nonetheless, a 0.3% cut is what we are seeing on the Nifty 50 as we speak. In tandem is the Sensex. Almost a 0.3% cut coming in over there as well. Nifty Bank also taking a knock of about 0.3% in today's trade. It's India VIX, interestingly, that has cooled off another 3.5% in today's trading session. We're below that 14.5 mark now at 14.3 is where we are at when it comes to the India VIX. A couple of names from the Nifty that have managed to hold on to the green in today's trading session. It's some of these IT names doing very well. Remember, Nifty IT right now is the only sector that's trading in the green. Everything else in terms of sectoral moves in the red right now in the market as we speak. It's names like Tech Mahindra, Infosys, HCL Tech, TCS that are holding on to some gains from the Nifty pack. Other than that, you have Asian Paints, HDFC Life, NTPC, SPI Life. So life insurance stocks are doing very well today, as was the case with them yesterday as well. On the flip side, names like Dr. Reddy's, Sun Pharma, Cipla. So you have pharma that's tanking away today, top sectoral loser. Adani Enterprises, Bajaj Finance, ONGC, Shriram Finance. So these are the bunch of stocks that are not doing very well in today's trading session. But if you take a look at some pockets that are managing to hold on to green, you have Mascot Dock and Garden Reach. Once again, it's these shipbuilders that are doing very well. Garden Reach, we have news flow on that as well. According to reports, they are building 2 research vessels in Kolkata. So that is a positive news for Garden Reach. On the back of that, that stock is up 3.5%. Aditya Capital seems to be holding okay. Kalpataru Projects is doing well as well. On the flip side, big losing names coming from Hindustan Zinc. That stock keeps consolidating in today's trade. A 5.3% cut is what we've seen, despite seeing a fairly positive brokerage note on that counter today. Some news flow, big news flow coming in on Hindustan Zinc as well, and we'll be bringing on Shesha, who tracks the sector closely, on the show to tell you more about this as well. Other than that, Granules, Hindustan Copper, Aurobindo Pharma. These are some names that are not doing all that well right now. Other than that, Aisha, what's standing out to you today?
Yeah, pretty much that. That's been the texture of the market. The fact that there is some safe haven buying. You can see that with the uptick which has come in on gold. Crude is getting a little bit volatile, but at the same time, the VIX has seen a little bit of a cool off. So let's bring on board our experts and try and make sense of what's happening. Sunil Subramaniam, Kunal, both are on the show. Kunal, hi afternoon. Let me come to you first. It looked like a quiet start, and then again, we're back to those 24,890 thereabout levels. What's it that you're making of the market texture?
Yeah, it's been a okay session for the index. I think after the last 2 days of a decent recovery from 24,500 mark, yesterday we inched closer to the 25,000 levels for the index. So I think we're just taking a bit of a step back, on the indices, just trying to consolidate over here. Now the key is the index holding on to yesterday's low, which I think is around 24,700 mark on the spot levels. Till the time we trade about 24,700 mark, I would still believe that the bias for the index would still remain on the bullish side. My sense is that we should be looking at a breakout pretty soon for the index, maybe over the next 2 days of consolidation. So today, my expectation in the morning was that the markets would probably consolidate and we would just about drift into a narrow band of 100 odd points for the index. Maybe tomorrow also, I think we could probably expect a very similar kind of a range bound action for the index before we anticipate any kind of a major uptick on the index. So my view remains biased on the bullish side, but 24,700 mark is a very important support. Till the time we trade above those levels, I think traders can hold on to long positions.
At least for now, we're above the 24,700 mark a little bit comfortably, so to say. But Mr. Subramaniam, hi, good afternoon and welcome to the show. Want to get your sense on how sensitive the Indian equity market is right now to the developments in the Western Asian region, because on the crude front, we seem to be fairly well cushioned from everything that's happening. Then explain to us what's causing this downtick in the markets today after the kind of jump we've seen yesterday.
No, I think that crude already had its big move. And while you're saying the cushion, that is, it's not going from 74 levels to 80, but it signals that 74 is still $10 more than what it was. For a pretty long period of time, crude has been in the mid-60s. So I think a $10 rise in the price on an average does have its impact on GDP, on inflation, fiscal deficit, everything, right? And including the industries which use crude products, all of their costs will go up. So you have paints, you have fertilizers, you have chemicals, you have aviation. So a broad swath of Indian companies do have crude as an intermediate. So I think to that extent, you will see the impact of crude continue to be worrisome from a hedge fund and short-term FII flow perspective, right? So I think they would rather wait and see which way this goes, because the point is that Iran, right, if it's being pushed into a corner, will it do something to do a blockade on the Hormuz Strait? I think that's the biggest risk that was factoring, because about a third of the world's oil comes through the strait. So while Iran's own production of oil is absorbed fully by China, is not impacted by the embargo that the US has put on Iran oil, so they're not selling to anybody else except China. So that's not the concern. The concern is about Iran retaliating by doing a blockade or threatening to bomb the ships, which tankers which go through the Hormuz Strait. Number one. Number two, if Iran does do some kind of a counterattack, is Israel going to go away from its stated position of, hitting the nuclear sites and hit the refineries in a big way? Which case Iran oil supply goes out, then China will have to buy from somebody else. So I'm not saying on the crude, we are not yet out of the woods in sense of predicting a stability. My medium-term view of crude is that it should come back down to the mid-60s levels. But till this war-related uncertainty remains, if it remains at the $75 level, it has enough impact on downstream companies in India and the Indian overall scenario. So I would say that that's the single biggest factor which is making FIs stay on the sidelines and causing the volatility. Domestic fund managers are fairly clear. They're stepping in to buy wherever they see value emerging because of FI selling. But clearly, we'll have to wait for this particular. See, in the Russia-Ukraine war and in the other wars, there wasn't an impact on Indian crude. This is the first war where that is being clearly seen as a risk factor. And I think that dominates the FI thought process at this point in time.
In fact, just this morning, we were having an interesting discussion with Prabal Sen from ICICI Securities, as well as MK Surana too, the former CMD at HPCL, on how they see the developments in West Asia and its likely impact on not just crude, but what it means for OMCs as well as refiners. Listen in.
All the three OMCs are trading between 5 to 7 times 1 year forward earnings. I'm saying when I say 1 year forward, I mean FY27, there or thereabouts, which is obviously a fairly attractive level, specifically after the fall that they've seen in the last couple of sessions. Also, I would just like to add that, while we are talking about the retail price, impact, and as Surana sir really said, that the chances of pushing through a price hike will probably be remote. Therefore, the $6-7 hit, if one has to take, that alone counts for around a 3-3.5 rupee hit on the current retail margins, which are at about 9.5, 10 rupees. So even after taking that hit, the margins at 6 rupees will still be well above historical levels. And if prices do increase and product prices catch up, you could also see a short-term impact in terms of higher GRMs and some inventory gains as well. So which is basically what makes it very difficult to take a definitive view right now on what the earnings could look like.
Strait of Hormuz has not been affected as far as supplies are concerned. So I would assume that with all the clamor which is going for de-escalation there from all over the world, I think that the negatives up to this level of conflict are already built up in the price of $74, $75. And as far as there is no further escalation which engulfs more countries, or there is a supply disruption in Strait of Hormuz, I think this is the price range where the current conflict stays. And it will move around this. Maybe that sometime you may get a spike, but unlikely to go above $80 even if the conflict between these two countries continues for a longer time, but provided it doesn't escalate further. The possibility of the Straits of Hormuz supplies getting affected is low.
Okay, and while we are talking about oil and crude, India has enough oil stock and there is no immediate cause of concern. That's the word coming in from Petroleum Minister Hardeep Singh Puri. Meanwhile, sources indicate that India's oil import basket is already diversified to mitigate any risks amid geopolitical crisis. ET Now's Priyadarshi, is joining here with more details. Prakash.
The oil ministry sources are suggesting there is no shortage of crude oil in the market. In fact, its availability is not an issue, as India has already diversified its crude import basket from 22 countries to 40 countries now. Therefore, its availability is not a concern at this point of time. Along with that, the oil marketing companies are well prepared and well positioned to handle the current situation. Oil ministry sources are also indicating that the disruption in shipping routes may cause concern, as it may spike transportation costs going forward. Along with that, sources are also indicating that crude prices may pinch if the Israel-Iran conflict persists for a longer period of time. But closure of Strait of Hormuz may pose a significant threat, but it is unlikely that closing this route is in anyone's interest, considering its huge shipment. Therefore, it's a very significant development coming in. Along with that, the oil minister is reviewing the current situation with the oil marketing companies and oil ministry's officials on a regular basis, and hopeful that India will navigate the current situation to protect its interest.
Right. In the meantime, more and more updates also coming in from the sidelines of the G7 meeting currently underway in Canada, wherein Donald Trump, it seems, has been saying that they're looking for a better deal than ceasefire with Iran, saying that EU is not yet offering a fair deal on trade and that there is a chance of a Japan deal, but they're tough. Also saying that they might do a separate Canada deal for Golden Dome and that pharma tariffs are coming very soon. And Sunil, that's been the other niggling worry, right? Or rather the big sort of sword hanging on the pharma sector here back home as well, as to what happens to the so thought of protected generic sector.
No, I do think that Trump is unpredictable there. My own sense is that he can't act too tough there, because ultimately the US healthcare system needs to provide cheap healthcare to the public. And the social security and healthcare, the government picks up the tab a lot. So I think if you remember the Obamacare, which was launched. So I think that this is a lot of rhetoric from Trump. But yes, there will be some tariffs which will come in, right? I don't feel it will be as deep as the market is taking current read on. And whether in the BTA for India, we can seek an escape clause. That's also got to be remembered. He might put a broad range of pharma tariff, but then if you sign a BTA with India, those might be excluded from the tariffs. So the whole set of options are out there in the market. Obviously, today it's a very dangerous time to go and step into the pharma sector to either buy or do anything. So it's better you wait out these kind of statements from Mr. Trump, as well as the BTA signing, before you make any strong decisions on CDMO versus generics in terms of the pharmas.
Okay, so that's your take on pharma. But Kunal, what are you making of the Nifty Pharma Index today? Top loser yet again, and big cuts coming in across Divi's Lab. Sun Pharma was troubled yesterday also and continues to be in the red. Zydus, Glenmark. What are you making of the underperformance that we're seeing in Nifty Pharma and the way we've seen IT emerge from lows? Do you believe pharma is in line to do that next?
I think it'll take some time, Sneha,
Okay.
because looking at the charts, the last 2-3 months of price action for pharma index, it's been a very slow, steady and a gradual uptick for pharma index as such. For example, in the month of March, the high for the pharma index was around 21,800 mark. In April, that was around 22,100, and the recent high for the pharma index was just about 22,150, 200 thereabouts, which means even after passage of a couple of months, the high for the pharma index is just 1% or 2% than the previous couple of months of high for the index. So that itself indicates that it's not been a very strong performer, and even in the last 2 months, we've actually seen just very few pharma stocks, and specifically the mid cap and in the pharma pack, they have started to look fairly attractive. The large cap ones, Sun Pharma, Lupin, etc., these are the ones which are still struggling, showing signs of correction. Today, you've seen fresh breakdowns happening for stocks like Aurobindo Pharma, where the stock has broken below its critical short-term support. So I think when you have such kind of a chart patterns across the board for individual pharma stocks, it's always prudent enough to wait out and not hurry, rush in to buy the stock or the sector as such in anticipation of a turnaround.
Sunil, what's the sense on, the entire defense gamut? I mean, everything from the shipbuilders to the pure play defense companies, the drone manufacturers, the entire ecosystem. Because again, the concern is about about valuations here and the run-up which has already taken place. But if this is to be a structural long-term story, who's to say right now is not the correct price?
Yes, I broadly agree with you that I think if you look at the defense sector itself, I would say that the 2021 to 24 rally was not just a pure defense rally, it was a PSU rally, which was a more of a value catch up, where defense also played its part, right? But I think then the supposed September correction with the FII selling and the volatility saw defense correcting a lot, along with other cyclicals there, right? So what happened with the Indo-Pak? I think it's made a sea change in terms of the outlook for the business itself. First of all, it's shown that the Atmanirbharta program of the government has worked very well because you've had all these drone manufacturers, UAVs, all of those come in, AS400, all come in from the Indian manufacturer. So I think a big thumbs up in terms of the confidence of the local industry to supply modern age technology warfare. That's one big positive. And second aspect there, why the positivity came is that India used up, and I think the Defense Ministry has placed an order about 40,000 crores worth of replacement munitions from, and which will obviously be a lot of drones and UAs and all that, which over the next 1 year, 1.5 years has to get executed. So that's a second positive sign for the sector. The third is that I think this demonstration of India in modern warfare in a successful way has opened up the export market in a big way, not only to other Asian countries, which will also look to get into this modern warfare, but even in the European side, where you see America's relationship with NATO is definitely weakening, and each European country is looking to build its own defense arsenal now. All their budgetary allocations for defense have gone up. So when they buy these things, I think Indian companies stand a very good chance in terms of exports there. And I think so exports which were about 24,000 crores in the year last year should easily double to 50,000 crores by 2030, which then means that the whole defense sector is probably going to grow at high double digits, probably about 20% per annum. So this long-term story, as you said, is now proving to be a more structural story rather than a typical cyclical story, because defense stocks generally in the infra space. However, one thing, what I noticed they're changing in the what drove defense up in the past versus the future is the PSU pack. Even now, the defense index is more about 75-80% is in the PSU stocks. But that's not the way of the future. I think the private sector, which has been supplying all these modern age equipments, which are going to take the lead. So I feel that that mix between private and public, that mix is going to change dramatically, and you're going to see the new age private sector companies doing all this modern equipment are the ones which are going to lead a very strong. And I agree that it's not now so cyclical and it's structural because each defense order takes 3 to 4 years to complete. So which means you see a sustained non-cyclicality in that spreading over the next decade. So yes, current valuations are high because all the recent good news is in the price. So if you're going to look at it in investment perspective, I would suggest 3 or 4 things. First is build a diversified portfolio of 20 odd stocks, give a greater weightage to the private sector. Second is whatever you do, please stagger this over the next few months, because as you have volatility, you'll get these prices also more reasonable. So don't put everything in a lump sum, buy it. But the third and perhaps most important thing is that hold on to this portfolio for at least a 5 to 7 year period, because you're going to see intermittent volatility, but in the long run, I feel that this is a structural opening up of the Indian defense market, and it's a very good time to be participating there. But do not expect short-term gains and come in with a very short-term outlook. That's my only caution that I would suggest here.
Okay, broaden your horizon. That's the prima facie word coming in from our fundamental expert. But let's take it across to Shivangi Sarda and find out what she's reading on the charts. Shivangi, it's been very range bound for past many trading sessions now. What's it that you're calling for the lower as well as the upper end of the range for the Nifty?
Very good afternoon. Thank you for having me. So we've seen that Nifty index has been rather moving in a very lackluster move from most part of the day today. But overall, we've seen that there is bit of hiccups at the psychological 25K marks, which the index could not surpass even in the yesterday's trading session. So some sort of call writers have to still unwind and the for the next leg of rally to commence from here. But overall, support-based buying is quite strong, which is holding the index at higher levels, and we are seeing higher highs, higher lows formation, the beginning on the daily frame as well. So put call ratio has also improved, and India VIX has also cooled off, which is also acting as a comfort for the bulls. Overall, we've seen buying in some of the heavyweight stocks, some good significant long open interest addition over here, which is supporting the entire market. So overall, buy on decline to continue here. Now the index has to hold above 24,700 for the next 25,200 marks territory. For the support, we're looking at 24,700 as the immediate make or break zone here.
So those are the levels that Shivangi is spotting on the charts for the benchmarks. But Kunal, want to draw your attention to some of these chemical names that have been in focus ever since we've seen disruption in crude prices. And one company in particular, Navin Fluorine, sitting at a new 52-week highs where the stock is right now. We have a positive report from Jefferies wherein they've retained their buy rating, target price at 5,280 rupees per share, significantly higher than when where the stock is trading right now, and they expect 35% EPS CAGR over 25 to 27. Well, so that is the take coming in. But Kunal, what are you making of Navin Fluorine on the charts? Already a good run up is what we've seen today, also up 4% and a new 52-week high. Is this sustainable?
Yeah, it seems sustainable because now we are looking at the entire sector. Most of the stocks in the sector starting to participate. So it started off with, I think, SRF showing signs of strength couple of quarters back when the stock made a new high, crossed levels of 2,700, 3,000 plus mark. And then I think it was followed by many of the other stocks which managed to make a good comeback. PI Industries, we've seen Aarti Industries showing signs of good recovery. Camlin Fine Science, that's a stock which I think has done spectacularly well over the last two quarters as such, from 180-85 to 300 plus mark. And I think in that sense, even Navin Fluorine over the last one quarter, I think has done reasonably well. The stock rising up from 32, 3,300 to now almost 47, 4,800 plus mark. So that I believe is a sign that we are looking at this trend emerging across many of the specialty chemical stocks, and this trend should sustain for many of these spaces. Now the question over here which happens idly is that when stocks make a fresh high for themselves, whether it's fresh 52-week high or lifetime highs, traders, they generally try and try to book profits. But in these kind of scenarios, it's always prudent to try and maybe add or build positions more into these names, because eventually the ones which have shown signs of strength and the ones which are leader in terms of price performance, they are the ones which continue to move up higher. So bullish on Navin Fluorine, SRF and many of the other specialty chemical names.
In fact, we did have a voice in as well talking about specialty chemicals and where is it that there is still room for re-rating within the entire segment. Let's try and bring up that soundbite as well that we had earlier yesterday from Ajay Joshi, who tracks chemicals as a sector very, very closely. But Sunil, what is your own sense on whether there are opportunities within chemical, especially right now, maybe tactically, because of the uptick in crude, and how it's going to spur up chemical prices too in turn?
I would still be very cautious at this point in time, because to me the crude situation is not so clear, right? Whether this rally in crude is going to go up further, come down. There's too much at stake in the Israel-Iran war. Like I said, first is an Israel attack on the refinery itself, or a Hormuz Strait blockade by Iran. There's too much uncertainty to really do a tactical play at this point of time on the chemical space. So I would say wait for this geopolitics to play out and then take a call. I would not hazard venture at this point into that, because of this. Crude is a very, very volatile thing, and to do something based on that in the short run, I would say stay away at this point.
Stay away from chemicals is the call coming in. Cautious call on that front. But like we were talking before, we interacted with Ajay Joshi earlier in terms of where he sees chemical prices going ahead, given the conflict between Iran and Israel that's going full swing right now. Let's go across and listen into what he had to say.
This ongoing conflict, plus the Strait of Hormuz, which Iran has almost banned, the supply chains of crude oil and natural gas would also get affected. So this means for the world is that oil prices would shoot up. And when crude oil prices shoot up, inadvertently the chemical prices, because they are derived from the crude oil, that would also shoot up. So this means that the raw material cost would increase, the input cost would increase for Indian chemical producers. One such chemical is, of course, methanol, which around 15 to 20% of India's methanol import, they do come from Iran. So now we would have to look out for alternate supply source. So companies like Balaji Amines, companies like Alkyl Amines, Then companies like Aarti Industries, which use methanol to make downstream derivative intermediates. Companies like Jubilant Ingrevia, which use methanol to make pyridine, which is their key starting material because they are a full-fledged pyridine player. So these are some of the big consumers of methanol in India. For acetic acid, the biggest two consumers are again Jubilant Ingrevia and Lakshmi Organics. So because of this conflict, I do see the input cost, the raw material, the cost of manufacturing cost going up this particular quarter for Jubilant Ingrevia and Lakshmi Organics particularly, and also for the amines companies in India particularly.
I just want to mark what the global markets are up to, because look at how Europe has actually kickstarted trade, because pretty much across the board you're seeing cuts of about almost 0.5% to over 1% coming in right now. Strange as it may be that yesterday the global markets pretty much just shrugged off any news from Middle East. But today they seem to be reacting to that. For us as well, we're pretty much around the session lows right now, not quite the 25K mark that we made it to on the Nifty futures yesterday. And by the way, the pre-market rates for the US equity markets also are indicating some more downside. We're down 256 points for the Dow futures right now, 0.5% down for both the Nasdaq as well as the S&P. But let's get in some closing ideas as well before we move further. Shivangi, what's on your list? Shivangi, you'll have to unmute yourself.
Beg your pardon for that. So we've seen that there has been good momentum in some of the capital good space stocks and the related sectors as well. Now, Siemens has been on my cards from the last two trading sessions, and today the way the volumes have also confirmed the price surge clearly indicate that buying interest is emerging here at the higher levels. And after a long consolidation of the last 3 to 4 trading weeks, we've seen that this stock is getting ready for a good up move here. Now, the volatility has cooled off, which is comforting the bulls here. Also, we've seen IVs have now come down. So, recommending a buy here with a target of 34.50 in Siemens with a stop loss of 32.60 zone.
Right. Okay, that's the take coming in from Shivangi. But Kunal, what about your strategies?
Well, I'll go with a buy-in or a contra-buy-in Voltas. That's a chart which is looking attractive. In fact, at current levels of 1280, 1290, I would believe that the stock can see a potential turnaround, provided it just about gives a closing of 1300 levels over the next couple of days.
Okay, well, so that's the stocks that both of our technical experts are liking at this moment. But Sunil, thanks so much for joining us on the show. Appreciate it today. So let's discuss more about this with our experts who are joining us on the show. Once again, we have Kunal as usual who's joining us in the studio, but we also have Varun Sabu, Head Equities, Anand Rathi, Shares and Stockbrokers joining us. And Varun, hi, good afternoon. Thanks so much for joining us on the show. First up, give us your sense on what you're making of the market today. Clearly, that uptick we had seen yesterday was very short-lived and that joy has already been wiped off the street. But what are you making of the trading session for the next of the week and in the short term as well? Any chances of an up move from here, given that we have once again, seen a little bit of a consolidation today?
Yeah, hi. Thanks, Irina, for inviting me on your show. Honestly, I can only say that I see these corrections as an opportunity to buy. One thing is clear, if you see that, I mean, you're seeing peak of negative noise being there. Iran, Israel, peak of noise is there. Still, you're not seeing crude react beyond a point. Also, our markets, for that matter. I think that any correction of this sort is just giving an opportunity to add into a country which is the fastest growing in the world. The consumption pattern, if you see, has not shifted at all. We are still seeing discretionary spends being at peak, auto sales going very strong. Across whatever parameters we see, the economy is doing very well. Fortunately, infra spend also picked up for the last 6 months, particularly the government spends, which we saw. We have had the boost from RBI, which came in terms of a solid rate cut, and then we saw a very good CRR cut also, which helps to infuse a lot of liquidity into the system. So from all perspectives, India is looking like a solid place to invest into. I don't see any reason why we need to be worried over here. Any corrections, I would strongly suggest that one should be a buyer into these markets.
All right, that's the take on the India growth story. You are indeed bullish, Varun. But which sectors do you believe will participate the most, and which sectors do you believe have that valuation comfort?
See, one thing is clear that we are into a situation where consumption is going very strong. So your discretionary spend is where we are very bullish on. Secondly, we are very positive on any interest rate sensitive for that matter. We are clearly in a downward interest rate cycle. Despite everything, inflation is remaining under control. I don't see any reason why we have to be worried on any front. The key ideas which I like currently would be one trend, which is one of the best proxies to buy in terms of a strong spending pattern on the grassroots level. I think rural is also picking up materially. So tier two, tier three is a place where you have to be in. Going to be very positive on DMart as well, which has a solid asset base. The kind of stores that they have set up, the business model they have set up is brilliant. So that plays out to be very well as well. I have been speaking about escorts being one of our key ideas. It's yet to play as in the theme. But I think escorts is going to be the stock of the year in my view. So these are key three picks which I would really vouch for over here.
Bets that Varun is liking at this point in time. Very interesting names there. Varun beat Trent, DMart and Escorts, which really hasn't participated much in the rally of late. But given the outlook for the tractor industry and as the industry is factoring in above normal rainfall this particular time. So let's watch out how the sales number pan out. But taking a look at the markets is Asian Paints, which has indeed managed to be there throughout the day in the Nifty 50 top gainers. And Kunal, if I can quickly have a chart check on this one, we are all aware of the news flow surrounding how Reliance has been now exiting Asian Paints completely. Past 3 days, Asian Paints is been inching higher. Where do you see it headed?
So no major breakout trend for Asian Paints. In fact, the stock is still trading into a major band of consolidation, 2000, 2100 as a support for Asian Paints and 2400 broadly as a resistance for the stock price. The concern for Asian Paints on the charts is that the stock has been unable to lift off even closer to its 50-day moving average, forget about 200-day moving average. There was a point when the stock was trading about those averages, 50 DMA specifically in the recent past, but the stock did not find a major set of momentum, and then the momentum fizzled out and the stock came coming back into retesting of its previous support levels. The volumes are missing for the stock price to eventually form a bottom, and then we are seeing the kind of news flow surrounding the stock price. Compare this with the likes of Berger Paint. That's a chart which has done reasonably well. I think from 460, 450 mark, the stock has given almost like a 20% return in the last 3-6 months of this price recovery. So just purely on the charts, on a relative comparison basis, also I think Asian Paints is something which is not looking attractive, so it's a risk to avoid as of now.
Avoid coming in on Asian Paints, but Shivangi, coming to you, taking the point forward about what Varun was talking about, he likes Trent, DMart, so clearly retail amongst the consumption space is what he is liking. Would you be placing your bets in the retail space as well in the overall consumption basket, or is there any other subsector from consumption that you're liking? And if retail, then what do you make of DMart and Trent on the charts?
Of course, retail space has been gaining a lot of momentum of late, and if we look at DMart, it has been floating above its key exponential moving averages as well recently. Now, of course, these are making a comeback, but the follow-up is slightly missing in these kind of stocks. So my focus would be shifted to IT stocks, which have been in focus from the last 3 trading sessions, and among that, we've seen that there is Coforge, which is showing consistent strength from the last 9 continuous weeks. It's maintaining its upward sloping channel, and the volumes have also risen in the last 2 weeks, which have confirmed the up move. RSI is showing positive signs, and recently we've seen consistent long build up over here, which makes it quite remarkable. So of course, Coforge will be one on the radar. The next targets that we're looking at is around about 1900 immediately, then positionally 2000 marks for this one.
All right, so those are the top bets by Shivangi right now. But what the other stock that is doing well today, and Kunal specifically wanted to have your take on AB Capital, because I guess the stock has finally made it to that breakout zone. So give us some sense there. How do you see the stock on the charts?
Yeah, I think fourth consecutive month of the price uptick for AB Capital, and the stock has recovered from 150, 60 mark or 65 odd levels towards 255 plus where it's trading right now. I think it's been an excellent last 4 months for AB Capital. The stock has ticked off all the right boxes in terms of volume pickup, momentum, price breakout, consistency of price trend, higher highs, higher lows, 200 moving average breakout, etc. So all of those patterns have turned out to be very well observed for AB Capital, and that's why I think you're seeing that the price have been a lot more consistent on the upside. The trends have sustained for the stock. There was a phase where the financial services pocket was going through a sharp correction. Even in that phase, the stock maintained its trajectory above the 200 plus mark. And then once the pocket recovered post the RBI policy meeting, you saw the stock moving up from 200 to 20 range to then 240 to 50 very quickly. So that's the kind of a sign which you look out for, which changes its range in every market scenario, consolidates for a few odd weeks, and then gathers momentum pace back again to make a new high. So I would believe AB Capital is a stock which falls in that kind of a category. Would expect the stock to continue to perform much stronger going forward over the medium to long term.
Okay, so that's the take on AB Capital. But Varun, also want to draw your attention to the entire real estate space. It's been the top gainer for quite some time, and now it's going through a little bit of a consolidation as a whole pack. What are you making of some of these realty stocks? Today we have news flow on Godrej Properties, wherein they've acquired 16-acre land parcel in Pune that they are going to be developing into a residential property with a revenue potential of 3,100 crore rupees. Remember, yesterday too we had a news flow on Godrej Properties, a positive news flow at that. So, Varun, what are you making of Nifty Realty, and how is this sector looking right now?
See, breather is very good for any sector, right? We have seen a very, very sharp run up in real estate in the last month or so. I think it's just a breather that they're taking. As I mentioned, I'm very, very positive on the on anything which is rate sensitive from here. And considering how the inflation is spanning out to be, I don't see things turning around that soon. So this cyclical turnaround will take time. So we are at the beginning of a cycle. I think real estate is one of the best plays when all asset classes are doing well. There's a very unique time when we're seeing gold rallying, we're seeing equities rallying. Now we're seeing crude also rallying. So most of the asset classes are moving up. So wealth creation generally gets parked into real estate, what we've seen in the past as well. Coupled with a very strong interest rate downward cycle, this just adds on to the thesis. So I don't see any reason why this should stop. The name which probably I would prefer in this space would be DLF more than any other name, considering the fact that it has an annuity portfolio also. In case if there's any shift in the way we are seeing the way the trend has been, DLF provides you that comfort, and valuations are also quite attractive there.
Right, so that's about the real estate sector as a whole, and DLF remains the top bet. But just a few minutes left before we shut shop. So let's also get you some of the BTST or STBT ideas from our experts then. And Kunal, you go first. Tell us which is the stock that you are eyeing right now.
So Torrent Pharma is something which could start to look attractive. The stock I would believe is was showing signs of a breakout or heading towards an intraday breakout. So would look out for 3,300 as a target. Stop loss could be now revised to 3,200. ICICI Pru is the other stock. We've seen insurance stocks making a good comeback. ICICI Pru is also heading towards an intraday breakout. So would look out for 660 as a target. Stop loss at 630.
Okay, so some of the stocks that Kunal is liking at the moment. Shivangi, any recommendations you would like to make for a very short-term trade? Let's say buy today, sell tomorrow.
On my radar is IT stocks. So Techem has to be one of them, which has witnessed a good amount of buying in the last 1 hour, which gives it a good candidate for buy today and sell tomorrow. But of course, positionally also this is very well placed. But the recent price movements that we've seen is quite well placed for it. We've seen that the PCR of this stock has improved significantly, which makes it quite comfortable for the bulls as well. So immediately for tomorrow we're seeing 1750 as the next targets for this one, but positionally it is getting ready for 1800 levels with a stop of 1685.
All right, so that's about Tech Mahindra that Shivangi is liking at this point in time. But yes, Nifty 50 is down almost 80 odd points. We have been trading in quite a range for throughout the day and majority part of the day rather, while Nifty Bank is also down more than 250 points as we speak right now. Some metal counters haven't been doing that well. Stocks like Hindustan Zinc, Copper, they have been down 3 to 7% in today's trading session. Add to that list in some of the other counters like Vedanta along with that. And what's doing well today is definitely select IT counters, select shipping counters and defense counters, and of course the city gas distribution companies continue to do well. But Varun, the other sector that has been doing very well of late is the insurance sector. Yes, everybody does talk about the kind of opportunities these companies have, the lower penetration in the Indian markets when it comes to insurance. What is your take on the insurance stocks? Because of late they have been buzzing. Any renewed investor interest or anything new that you are picking up?
Yeah, hi. So, in my view, insurance has been seeing a lot of emphasis from the government side also. And as you mentioned, there's a lot of under-penetration here. So that's the reason why you're seeing some interest in the insurance names. And yeah, there are some investors which we keep talking to are also getting positive on the names. And I think there could be a structural rally which we would see in the insurance names from here.
Okay, so that's the take on some of the insurance counters. Kunal, we're just understanding that silver is trying to approach a fresh all-time high for itself right now on the MCX. You were bullish on silver, if I'm not wrong. Would you still prefer it over gold?
Yeah, so I think depends. I mean, if you've managed to ride the entire rally for gold prices, then I think maybe right now silver is something which starts to look a lot more attractive. We were discussing this, I think some time back, that the gold-silver ratio, I think, is also something which starts to now get more in favor or tilt towards silver prices, starting to show that signs of outperformance. So maybe if you ask me in terms of an edge, right now, yes, silver prices do have an edge in terms of a potential outperformance. We've seen the silver prices breaking past above a major resistance on dollar terms. There was a huge hurdle around the 30-32 mark, for the dollar prices. Those levels have been crossed, and that's why I think you're now seeing the silver prices going to a strong momentum zone on the upside. So maintaining that buy stance on silver. Not sure if the asset class would outperform gold prices, but then it all depends what one's time frame as well as risk appetite is.
So that's on some of these precious metals that are on Kunal's radar. But Varun, give us a sense of the kind of central bank action we're expecting for the rest of the week. Today we've had action coming in from Japan, wherein they've left their rates unchanged, but there is some correction on bonds that they are going to be undertaking. We have FOMC outcome tomorrow. It's going to be late at night for us. But still on that front, what are you expecting? The street is largely penciling in rates to be unchanged, but there is ever increasing pressure coming in from Donald Trump on the Fed. Do you believe that could pan out into anything material, or a hold is what we can see?
I think that's the problem that Fed is dealing with, right? They are very clear they don't want to cut rates. That's been a statement which has been there, and the push, even the more push from Donald Trump has been keeping them rigid on their stance, and I have not seen them really changing their stance just because of the pressure, and they've been there for a while now. I don't see a reason why they will really shift their focus just because of the pressure from Donald Trump. But I think inflation has come under control on their side as well. If one logically has to think, there could be a possibility of a slight cut there as well. But that's an outside chance that we're talking about.
All right. So yes, all eyes on the FOMC meet outcome, and whether or not how does the commentary pans out, that will be the key to watch out for. For now, the market is penciling in no change in the rate for Fed. But yes, the pharma counters haven't been doing that well. We have discussed that in detail already. But Kunal, specifically, one of the counters that is being the biggest drag in the FNO side is Aurobindo Pharma. If you can give us some sense, how do you see the stock? Because for Aurobindo Pharma, US market is one of the key contributors.
Yeah, and I think with the kind of news flow surrounding, we've seen that the stock has given a fresh breakdown. I was just mentioning this earlier that Aurobindo Pharma has broken a critical support around the 1140 levels. This is almost like a 2-month, 3-month key support point for Aurobindo Pharma, completing a bearish pattern or a negative pattern as such on the short-term charts, and this could probably have implications of at least another 40 to 50 points on the downside for Aurobindo Pharma. That's why I would believe that even after today's sharp price correction and high volume sell-off, there could be more legs on the downside for the stock.
Okay, so that's a take on Aurobindo Pharma. Well, last 5 minutes or so left of trade. Before we hand it over to Ashesha for the closing, Shivangi, any view on what the market action could be tomorrow, given the run-up we've seen yesterday, absolute consolidation that we've seen today? What does tomorrow's market flavor hold for us?
Us, we've seen a very lackluster move in the second half, especially today's session. But there has to be some unwinding on the upside, some call writers which need unwinding for the next leg of rally to commence. So this will be on the cards. Overall, there is strength because support-based buying has been quite strong, and the other factors have also been giving in and adding to the market sentiment. So overall, buy and decline to continue here for the upside. We're expecting 25,050, 25,250 odd levels, and with a support of 24,700 zones.
All right, so Kunal, similar view by you as well, buy on dips for the index?
Yeah, buy on dips for the index. But I think tomorrow, if we manage to just about retest that 24,700 mark, that could be a much more better level for traders to initiate a contra buy.
Okay, so that's the take coming in. And Varun, is there any market trigger back home or overseas that could change the kind of trade that we're expecting tomorrow? Perhaps some positive news from the Middle East at all? What is that one trigger that could influence the market going ahead?
Absolutely. You just mentioned what could be the possible trigger. If there is any de-escalation, which is quite a possibility, that there could be some change in stance there. The maximum negative is there in the price. What we are seeing markets factoring in. I think a very very interesting bet over here could be the OMCs. If someone really wants to play something which could have material triggers in the very near term, it's the OMCs. Today is the time to buy HPCL and BPCL when they are being written off completely from the fact that people are really worried about crude, how it's going to shoot up. One has to keep in mind these tensions are at peak. Still, crude has sustained sub $80. That really talks about it. So that's the opportunity one has, and one should buy these names. And they are very cheap in terms of valuation. So it's not that you're entering names which are very expensive and they would correct materially. So there's a time to add these names, and please play for a pivot there.
All right, so with this, we let you go on that. Thank you so much, Varun, Shivangi, as well as Kunal, for taking the time out and speaking with us. Just a few minutes left. Let's hand it over